Well, good afternoon, everyone, and welcome to today's special event here at TradeStation. As you know, our TradeStation special events are webinars that are hosted by industry experts and leaders from around the world. Topics include a wide variety of key international and domestic financial and trading issues, opportunities, and trends. And today we welcome Mr. Vince Vora, the head trader of TradingWinds.com. He has a very catchy presentation for us today called Voracity, the most powerful way to safely trade in today's markets. Before I turn things over to Vince for our presentation today, I want to talk a little bit about our disclaimer and disclosure information. Our presentation is for educational purposes only. All the symbols and trading ideas that we discuss here are for demonstration purposes. They are not recommendations. This presentation is not an offer or a solicitation of any kind in any jurisdiction where a TradeStation affiliate is not authorized to do business, including but not limited to Hong Kong and Japan. Remember that active trading is not suitable for everyone, and sometimes options trading carries a high degree of risk and may not be suitable for you. Please take a look at the disclosure information in the two different PDF handouts I've made available in that documents folder in the chat panel, or you can view these on the TradeStation website. My name is Don Prattle. I am the Director of Trader Development and Education here at TradeStation, so I don't want to take up any more of your time talking about TradeStation business. I want to talk about Voracity, this powerful way to trade in today's markets.
Okay, thank you so much. I thought there was an issue with the mic. Thank you so much. Really glad to be here, everyone, and thanks for joining us today. Very happy to introduce our Voracity system for you for the very first time on TradeStation. It's something that I've been working on for many, many years. I'll tell you more about it as we go through the presentation. But once again, thanks for joining us. Really excited about this. I am Vince Vora. I'm the head trader here, as Don was saying. I have been doing this for about 30 years now, a little over 30 years. It's been a heck of a ride, but throughout that time, I've developed several systems, one of them being Voracity. And it's not only used by retail traders such as yourself, but also several money managers and hedge funds now. Let's see, I'll try to turn up my mic a little more here. Is that any better? Can everyone hear me a little clearer now? How is that? Okay, excellent. All right, so please do remember that trading can be risky, so please, I don't encourage you to trade with real money until you're completely comfortable with the system that you are using. How is that, everyone? Is that better? Let me see if I can turn them any here. All right. That's better? Okay. Excellent. We'll keep it that way. Let's carry on. So in today's presentation, what I'd like to start talking about are the biggest challenges in this market. I mean, normally when you're trading, there's normally challenges one sort or another. I want to just spend a couple of minutes talking about what they are today and how Voracity can help you overcome some of these challenges. Okay, I'm going to talk about the components of the system and really how this came about many years ago. And then I'll talk about how it works and why it works, but more importantly, how this can work for you. And hopefully we'll have plenty of time for Q&A. All right, before I get into this, just have one quick poll question. I ask this at every event out of curiosity. How many of you have seen me present at an event or a webinar such as this before? You can just take a few seconds here and let me know yes or no. I'm going to take a sip of my coffee and then we'll get right into the presentation. Thank you very much. It looks to be a pretty even split here. Excellent. Well, either way, really glad you decided to join us today. For those of you who are joining us for the first time, what you're going to what you might want to know about me is that I'm an extremely conservative trader. Although I have been doing this for about 30 years. I originally started trading off fundamental analysis, and I quickly uh, found that that really, in my opinion, was not the way to go. I took some fairly large losses when I first started. And it was really due to the fact that the information that I was basing my trades on was not always accurate, even though financial statements were approved and reviewed by reputable accounting firms, etc. There were times where there certainly was misleading information that I traded on and took a loss as a result. So many years ago, I started my journey into technical analysis, and that's sort of how it all started. I'll talk a bit more about how Voracity all came about. But let's right now talk a bit about the challenges in this market. Now, I've been coaching for several years and I've coached hundreds, if not thousands, of students, and there's some very common challenges that they run into. And today is no different when it comes to volatility. A number of traders, especially when they're first starting out, have a very difficult time trading in periods of high volatility. Now, volatility, if you're a swing trader or are trading on a daily time frame, for example, can be a real problem for you. This can create quite a challenge. However, if you're an intraday trader, if you prefer to trade on a lower time frame, like the 5 minute, the 15-minute, volatility can actually be one of your best friends when it comes to trading. So one of the things, though, that no matter what time frame you trade, what you need to do is be able to spot volatility or recognize it when you're in such a period. Now, I'm going to share my screen for a second. I want to show you my chart here, and hopefully you'll be able to see that in just a second. There it is. You should be seeing a chart of my of the SPYs, the S&P 500. And you'll notice that recently, during these periods where it was trending nicely, now you can have a trend upward or downward, it really doesn't matter. But when it's trending nicely, what you will notice is that the bars are fairly uniform. In other words, they are very similar in size, and there's very few wicks and tails. Now, I generally use candlesticks to trade with. So when you have very few wicks or tails, you know that this is just sort of chugging along very nicely. And that's exactly those periods where it's trending very strongly, as opposed to periods of increased volatility, such as this period right in here, the August to October period of last year. Look at the difference in sizes of these candles and look at all the tails and wicks on these candles. Same with, the January to March period early this year. Again, some very erratic behavior. And so that is something that makes it pretty obvious for you to be able to see and know that you're in that period. And when you are, that's when you can take extra precaution, maybe reduce the size that you put into trades, that sort of thing, and and go from there. Give me a quick second. I think there might be another audio issue. Can everyone still hear me clearly? Apologize. It's as high as it goes. I'll try to speak up if I can. All right, great. Many of you are saying it's all good. Thank you. Okay, so now let me go back to my slides for a second and finish off. I just have a handful here before we go back to the charts and spend the rest of the presentation on the charts. So as long as you can spot volatility, you'll be able to know how to handle it. And if you're in that period, that's where something like Voracity will really help you. Um, as we go through this presentation, you're going to realize that what Voracity does to you, does for you, is limit your risk without capping your upside, which is something I've worked many years on. But I'll share it with you as we go through this. Another very common challenge is market direction. how do you know exactly where the market is going next? Now, this is easier than you may think. One very, very easy trick, or one thing that you can do as a trader to sort of judge what the next direction is for this market is use a very high time frame, like a monthly time frame. The monthly time frame will smooth things out and really show you a clear pattern. Now, you may run into times where it's just consolidating sideways on the month and you really have no trend, and you'll have to be patient and wait for a trend to reveal itself. But generally, using the monthly time frame, and we'll go through many examples today, you'll notice that there is a clear trend one way or the other, up or down. At that point, you revert back to the lower time frames and take trades in that direction. So trying to pinpoint exactly the next move on a lower time frame is going to be much more difficult. But again, that's where something like Voracity will help you determine that for you. Okay. Now, another common challenge is when to exit, and this really comes down to discipline and building the right habits. Okay, if if you gain experience, once you gain experience, you'll be able to remove some of the emotions out of your trading a little easier. But when you're first starting out, it's going to be very, very difficult for you. Again, a product like Veracity will help you remain calm, help you understand exactly when you should remain in that trade and when you should uh, exit that trade. So it really does everything for you. And we'll get to those charts in just a few seconds. Now, when it comes to Veracity, the components of it here, there are several indicators and oscillators that make up this system. Let me give you a bit of background here. The journey for Veracity started about 20 years ago, and the basics of the system were developed in about a couple of weeks or so. But ever since, I've been testing it, trading it, tweaking it to refine it to the point where I can be very comfortable knowing that it's going to protect me without capping my upside. In other words, for those of you who might be familiar with some of our other systems that are based solely on technical analysis, but rely on trend and momentum. The difference with Veracity is that it is designed to capture the big moves. Okay, that's really what it's designed to do while still protecting your downside. Okay, and so that's how long I've been at this. And over the last couple of years, it's gotten to the point where I don't think I can get it any better than it is. And that's why we've decided to release it. And today we're putting it on TradeStation, and we're quite happy about that. So, you know, with all the back and forward testing that I've done over the last 20 years, I know exactly what it can do for me. How can you be comfortable that it can do the same for you? Well, that's what this presentation is all about. Hopefully by the end of it, I'll be able to show you exactly how it can work for you. So again, it is designed to capture the big moves without without increasing the amount of risk you have to take. Normally in the markets, whenever you're looking for bigger profits, automatically you're taking bigger risk. Not the case here with Veracity. It still allows you to keep your losses small, all right, without capping your upside, and therefore maximizing that safety component in every trade. All right, one more slide and then we'll get to some examples. I know you must be waiting for that. So what can it do for you and what will it do for you? Well, it will definitely help you identify some pretty great short-term as well as longer-term trading opportunities. And especially for those of you who may be managing a retirement account or managing money for others and looking longer term, this is going to be fantastic. And I'll show you exactly why in a second. And also, this will help you predict those major market moves. If you use the monthly time frame with Veracity, you will know exactly when you're in a nice long trend upward or a bear market. It is very, very clear. So let's get back to the slides or my screen, sorry. And and start going through some examples here. So let me flip to a different tab here. Now, this is what the Voracity system will look like. Now, for today's presentation, I've actually switched over to open, high, low, close bars just so that you can see my little indicators here a little clearer for setup, entry, and exit. Now, if you're a TradeStation user, you know that if you want to change those, all you have to do is right-click on them and then click Format and switch the colors or the style of these symbols. It's all customizable, as I'm sure you know, so you can tailor it to your preference here. But what you'll be looking at today on my screen here is these little light blue lines above a bar um, that marks the setup bar. What that means is a trade may be setting up. It may be ready to trigger. Okay, it doesn't mean buy yet. Okay, now if that is followed by this blue plus sign here, that is when you would enter that trade. Once you see that blue plus sign, that's the signal to go long. All right, and then the black dot here would be your exit. So this is a monthly chart of Apple. And if you look back here, for the longest time, Apple was a single digit stock, 5, 7, 8 bucks for the longest time. And then back in July of '05, it started to move. Well, on the first major pullback here in July of '07 on that monthly chart, that's when it got on the radar for Voracity, and that's when we triggered our first. Now, there's a number of things that I want you to know. First of all, just because you see a setup and a trigger, etc., doesn't mean you have to take every one. That's not the way this was designed. Let me explain. So the reason why there are some setups that you want to trade versus some that you do not is because there was no way for me to discard some of the smaller trades that don't necessarily work out well, and you don't see any here on the Apple chart, but you'll see them as we go through um, uh, the other examples. There was no way for me to, you know, leave the upside uncapped. In other words, have it wide open for the big trades, um, without quickly exiting to protect ourselves. So there are going to be times where you see some trades that trigger and immediately get you out. Okay, but I'm going to show you why you would take some versus others, and that way you can focus on the stronger candidates. One very simple thing to do is focus on this line here, which is the 20 period simple moving average. Now, it's not really necessary, but I find it to be a very helpful tool. Using the slope of that moving average, of that 20 period simple moving average, really helps us identify the strength behind that move. So, in other words, you can measure the slope of the price bars as well. They'll tell you the exact same story, but if and when you're in a phase where it's pulling back on you, where it's retracing here, just like this area in here, during this period when it's retracing, if you're measuring the slope on the price bars, you could mistake that for a or downward momentum. Okay, but if you notice that the 20 is still maintaining its slope higher while this is happening, then it helps you understand that this is uh, short term here, and it's just a matter of time before we continue that move higher. So now it becomes a matter of identifying the proper entry point here to take advantage of the rest of that trade. Now, Voracity does this for you. It helps you identify it, and you will see setups and triggers while that moving average is flat. Obviously, the ones that have a slope are a little safer to take. They're more of a sure thing. But as you notice here, and with just using basic technical analysis. If you take a trend line, okay, let's take a trend line here for a second, and let me just grab my drawing tool, grab a trend line, and if you take this trend line here, you'll notice here that the setup and the trigger happen on a break of that trend line. Okay. Now, if you had a similar thing in here where it broke the trend line and it already had a significant slope higher, then that would be an even safer trade. So with what you're going to walk away with here, what you need to understand is that on any given night, there will be several setups that you will have with Voracity, depending on what you trade or how many charts are in your watch list. Okay, but let's say you have 6 or 7 that are signaling a setup, a potential setup. You want to compare those one by one and select the 1 or 2 strongest trades. Okay, and so obviously having slope would be fantastic, would be a huge advantage. Others are, a break of a previous high would be great, especially if, you get a break of that high. Let's mark this high here. Okay. If you get a break of this high, these previous highs, and then it retests it and gives you a setup at that time, again, even stronger. Okay. But you see the fact that it identified the entry here and it held us in the trade for the bulk of that move. Okay. So on a trade like this one back in here, where it set up, it triggered, and it immediately pulled back against us. All right. It immediately gets you out. So your downside is limited, obviously, and that's why you will notice some chop on some charts, and I'll show you several examples. But most of those can be avoided by using basic technical analysis and that upsloping 20. Now you can see that Apple's gone on to give us some amazing trades, currently in one here since July of last year, continuing to move higher. Now, this doesn't just work on monthly time frame. You can use any time frame. Okay, I'll slowly go down. You look at the weekly time frame, and you can see that there's some great trades here to take here during these periods where it's trending nicely up or down. You can look at the daily time frame, and it'll give you some nice setups. Intraday, it works on futures, forex, anything. These are the recent ones on the daily chart. So it had identified a short trade here. It started to go against us, got us out immediately, then got us in for a very nice run here, and also in here still on this trade back from late April on Apple. Okay, we'll go through a few more examples. Let's look at Home Depot, for example, another major Dow component. Here on the daily chart, again, here's a few. Now, you may sometimes see a setup like right here where there is this light colored bar above the price bar, but it is not followed by the plus sign. So that means it did not trigger. It had identified the potential for a trade, but it did not trigger. This time it identified the potential trade and then got us in here a couple of bars later. Same with here, got us out and then back in. Okay. Now, if you're already in a trade and another setup happens here before you get that exit, it will not flag that. In other words, it'll show you one long trade at a time. Okay. That's how it works. And you can see the most recent one is still going with a beautiful upward slope on that 20-period moving average. But again, whether it's the daily, the weekly, here's another beautiful trade down in here. Now, you may have not taken this trade because of flat momentum. On that particular night, you may have chosen one that had a slope, that's all fine and good. The other thing I want you to understand, though, is when you see this, you want to look at the chart overall. What do we see here? Can anyone spot the pattern here of this area from um, the middle of March here into August or so down in here? A channel, exactly. Ian says a channel. So when you get that channel and you get the setup happening within the channel, it's giving you a very high likelihood of a breakout. Okay. Now, some will flag right as it breaks out, others will not. But when you see this and you see this pattern, you should keep it on your watch list and look for that breakout. And look, it not only breaks out of that channel, let me just draw a line here at the top of that channel. Let's just use this high, okay, in here. All right. It not only breaks out, but then it retraces back towards that moving average. And now it's sloping higher. That would have also been a great entry. Now, even if you take every single setup and trigger, okay, you'd still do all right because the winners are usually much bigger than the losses. But that's not the intent here. The intent here is to be selective with your entries, pick the one or two strongest, and use basic technical analysis here. And I'll tell you a little later on how we can teach you a lot more about these minor techniques. But here's HD on the weekly. Let's go to the monthly and show you how it's done. And there you go. So right in here, Home Depot back in 08, 09, after that crash, had bottomed out, started to turn around. There's that slope in that 20. There's the setup, and it carried on for many, many years. Now imagine if you're managing a portfolio for a retirement account or just for the longer term, and holding a stock that does pay a nice dividend, all right, all throughout here. Using something like Voracity is great because not only do you have that comfort level of knowing that you don't have to guess as to when it is time to get out. Certainly, you can scale out here. I wouldn't hold this for 5 years or so without taking some profits along the way. Of course you would. I mean, this was a huge move, getting in around 40, and getting us out here around 130. I mean, just a massive move over 5 years. But if you were collecting dividends, you were scaling out. And if you're an options trader, and actually I should ask, how many of you do trade options here? If you're an option trader, at times when it starts pulling back or consolidating sideways, such as this, it's also a great time to write some calls against these positions, collect more premium, and then buy them back when you break another high or if you get another signal to go in. The other thing you can do is look for other chart patterns, not just channels or trend line breaks, but a cup and handle, a double bottom, that sort of thing. Or use candlestick patterns. You can switch to candlesticks just like we have here. Look for bullish engulfing patterns, look for hammer candles, any type of reversal candles along that 20 period moving average, that upsloping 20, and it'll give you other entries. All right. So it's a great tool, but if you're having trouble with discipline, in other words, if you're getting scared out of trades, let me show you the difference here. And let's go to the more recent time here in the S&P. When you're in a trade like this and it's moving your way, it's all great. As soon as you start seeing some bigger red candles, that's when your emotions come into play. And when you start to question yourself or start to think, am I about to give up the profits that I just made? Right? And you may panic out of a trade. Well, that's why this tool is so helpful, because during these big moves, there are plenty of those situations that happen. And that's why I have all these bars colored the same. That way, those red candles will not cause me to panic or question myself. I'm just trusting the entries and exits. Now, I have that level of trust already because I've been number one, I designed it, but I've been trading with it for a very long time. But trust me when I say this, after you flip through a few charts yourself and you see how well this works, you'll quickly gain the confidence in this like I have. Let's go through a few more examples here. How many of you have traded NVIDIA this past year? NVIDIA has been on quite a run. Now, here's the run this past year on the monthly chart. Just incredible. I mean, moving from, that $25 area up over 135 currently. And it's continuing on. It's crazy. Look at that momentum here. All right. Now, here's a few examples of where, it gets you in and back out fairly quickly. Okay. It recognizes this isn't working and it gets you out. So if you were to take every single setup, you would get chopped out sometimes, but your losses would still be very manageable compared to your profits when you catch a run. But again, the idea is not to take every single one of these. Okay. It's always better to stick with the ones that have a slope in place, the ones that are breaking above a previous high. Okay. The ones where, look, if you move from one side of the moving average to the other and you retest it successfully and hold, chances are it's going to continue in that direction. Okay. If you use basic price action, okay, and before you were making lower highs and lower lows, and now you switch to making higher lows and higher highs, it's going to continue in that direction. And if you get a setup and a trigger with Voracity, now you have much more confidence that it will continue. Okay. But where the confidence comes in, that I'm sure you'll find out over time on your own, is that when it isn't going your way, it quickly gets you out. So, it really helps protect you without capping the upside during these monster moves. And again, it's not just monthly. Look at any time frame on these you want. Here's that weekly time frame on here. Okay, so let's go to another Dow component. How about 3M? How many of you have traded 3M in the past? This is the weekly. Let me show you the monthly, then I'll go to the daily for you. Okay, there's the monthly. The bigger trades, all right, it captures the bulk of it. Okay, it captures the bulk of it, of that move, compared to the trades that don't work out and it gets you out right away. That's, for me, this is the thing that the reason why I'm such a conservative trader is because I did take large losses early on and it's left scars. I'll be honest about it. It's left scars. Whenever I sit in front of the screens and I need to pull that trigger and open that position, I get that knot in my stomach that reminds me of those losses. But that is exactly what's made me the trader I am today. If you've ever worked professionally at trading and or worked on the floor, one of the things you'll hear is very common that you'll hear the other pros talk about is that it's really difficult to become a very good trader unless the market slaps you around really, really badly at some point. When it does, you really gain respect for that market. And you know that the only way you can be successful is to really protect yourself, protect your downside. That's the main thing. We can all pick off a nice trade during a strong trend at one point or another. But this game is about being consistent, okay? Being consistently profitable. If when the market's trending strongly, if you're making big money, but then giving it all up during the next consolidation phase, you're just spinning your wheels. You're not really getting anywhere. So you need to protect your downside while leaving that upside uncapped. And Voracity really does that for us. And let me show you the weekly and the daily on this chart on 3M. There's the daily right here. Again, some real nice moves. the upside lately. Nike's another one that has performed very, very well. Now Nike, went through a bit of a spurt lower here, then recovered, and this is the daily, by the way, and recently has been falling back again. But let's look at this over time. Look at the monthly chart on Nike here. Similar to Apple, when it was in single digits back here, really wasn't a big name stock. Not a lot to be done, just consolidating quietly along that flat moving average. And then suddenly we start getting the heads up that something bigger is coming on. And then right here, we get a setup just as it breaks this high, just as it breaks out of this lengthy channel. Now, as far as channels go, you should get very excited when you see a lengthy channel, because the longer that's in the channel, the deeper that breakout. In other words, if you measure the length of a channel and then measure the following move, they're usually very symmetrical. Look at the length of this one, it's almost identical. All right. So you should get very excited when you see a lengthy sideways channel and then you see Voracity give you that signal. But here's the most recent one, just a nice easy pick. I mean, you had a nice slope on that 20. Trend was in place. You get your setup, your trigger, and you just ride it out until it tells you to exit. But along the way, of course, you can be banking some profits. You can be selling calls against this, collecting dividends. It's fantastic. All right. Let me show you another Dow component, Johnson & Johnson, that has done really well and actually has been in an upward trend from the beginning of the year. But again, whether it's monthly, weekly, daily, it doesn't matter. Let's get drastic here and move to a 5-minute chart on J&J. There's those moves over the last couple of days. Some days are flat. Today, J&J really didn't move much. All right. But again, you're not going to lose much. This is pretty much a scratch trade right in here. But when it does, you'll catch those moves. Now, Johnson & Johnson might not be your ideal stock to day trade, but whether it's Johnson & Johnson or a Tesla or a Google or an Amazon, whatever it is, maybe a Starbucks. Starbucks was a trigger on the daily the other day. Let's have a look here on the 5-minute. Today caught a couple of nice ones to the downside right there. Look at that slope. Okay, but think of the basics. Look at this. We went from being above that moving average to below, came back to retest it, and dropped again. And that's where we triggered. Okay, then it tested it one more time and then it collapsed. All right, getting us out right in here. So again, there are several oscillators and indicators that make up this system or the formula behind it. It's the combination of them. And when they come together, that's how they signal these setups. Let's look at the longer time frame on Starbucks. There you go. Some real nice moves here longer term. Amazon, you know what a ride that's been on lately. And there you go. Been in here since the beginning of the year, where most tech stocks have gone up, like Apple, and then Amazon, of course, benefiting from the horrible losses in the brick and mortar retail space. They seem to be getting, more and more sales online, and that's what's resulted in this move. Microsoft, I knew a guy who used to trade only Microsoft and do very, very well. Here's the monthly chart on Microsoft. Let's go to the weekly on Microsoft. There you go. Real nice trade since July. Look at that. And then let's get dramatic here and look at this on, well, let's go back to the 5-minute. And there you go. Another nice trade in here. Came in around 11 a.m. or so, taking us to about 2 p.m. or so on the 5-minute. Here, there was one yesterday to the downside. Okay. Now, again, you can use this on stocks, futures, forex pairs, really doesn't matter. Let's look at a forex pair. Let's look at euro, British pound on the 5 minute. There's one there, up this one, up that one. Actually, that was pretty good here uh, in the late afternoon hours yesterday, and then it's kind of gone flat since. Uh, let's look at a higher time frame. And here's the thing: let's say you pull up a daily chart of this, and you don't really see much. Either it's not triggering, or it's not giving you consistently good trades. It's just kind of chopping out, chopping out, chopping out. So whenever you get the next setup, you want to look to your left. You want to look back and see how this has performed on that time frame, on that particular underline. And if it's not great like this, you want to move to something different. Let's move to, say, the Aussie CAD pair, right? Now, the Aussie CAD pair on the daily, now you can look back and say, well, yeah, it caught that one, it caught this one, it caught this one. That's much different. So now, when you're comparing one setup to another, right, you want to take that into consideration. And we're here to help you with this. The idea isn't to just give you this and have you walk away and not know exactly which trade to take versus another. We're here to help you, and I'll talk a bit more about that later on. How many of you trade an index like the Qs or the SPYs? Let's look at the Qs for a second here. And let's look at longer term. Now, this is what I was talking about when we were on the slide portion of the presentation. And I was saying that, you can use Voracity to help you with market direction. Well, if you're in a trade like this on the Qs, when you get back in 2012, a signal with nice slope here higher, and you're breaking these previous highs, okay, and the market starts moving higher, whether you're looking at this chart in 2013, 2014, 2015, whatever it is, you see that it's been in this trade since then, and it's just a nice, steady, slow climb higher with momentum behind that move. Look at that slope. So when you see that, it doesn't mean you need to trade the Qs on the monthly, but you could go down to a lower time frame and look for bullish setups. When this is trending like this on the monthly, you wouldn't want to go to the daily and start picking out short trades. You want to pick out trades that are in line with this. And whether you're using multiple time frames and confirming it with monthly, weekly, and daily, for example, or just using the monthly for the overall longer term trend, and then going down to a daily, even an hourly, and picking off those long setups, it works really, really well. All right. Um, Let me just give you one other tip here before I go. And this is really going back to the basics. Let me bring you back to this candlestick chart with no indicator on it, just so you can see what I mean. One of the areas where new traders go wrong, or even traders that have been doing this for the longest time, but have unfortunately, built bad habits along the way. More often than not, it's the trader. We the traders make it difficult on ourselves. You want to simplify your trading as much as possible. And the way you do that is to start with an underline that is trending nicely. Have a look at something like AEIS. Is there any doubt what direction this is moving in? Now, whether you prefer to trade long or short really doesn't matter. You can build a portfolio or a watch list, I should say, of symbols that are trending nice and steadily and strongly in one direction or the other. Let's look at another one, CGNX, right? Very clear trend. ANET, very clear trend, right? This is the daily, by the way. Have a look at this stock. If you found this, would you have any idea what's coming next? I mean, try to pick off a trade in here is going to be extremely difficult. Whether you're using Voracity or anything else, it's going to be difficult. So don't make trading difficult on yourself. If you see a choppy, messy chart like this, stay away from it. Look at the ones that are trending nicely, and then just look at those entries, those pullbacks. Throw on a 20 period moving average, and it suddenly trading becomes very, very simple. But Voracity is there to do all of this for you. So just to recap, what Voracity will do for you is not only highlight when things look like they're about to set up, okay? So it puts you on alert. Then it tells you exactly when to get in and when to get out. And in the meantime, you have the comfort of knowing that you have a system that was in development for about 20 years and has been tested, with thousands and thousands of trades, and performs very, very consistently across most markets. And the real level of comfort comes in with the fact that if the trade starts going against you, it will alert you and get you out right away. Now, keep in mind, you're always at a risk of a gap. If the market gaps against you, okay, you won't be protected. You might not be able to get out ahead of that gap every time. That's why I prefer to trade this with options. Or if you're going to hold stock, marry a put to it, and you'll have peace of mind. You can sleep like a baby, and you won't have any worries here. Now, I see that there's a number of questions about how to get this. Let me um, let me bring up another page here and share this with you. Give me just one quick second here. Now, if you go to tradingwins.com, actually, let me switch this over. Sorry. Tradingwins.com, that way you can see it. Tradingwins.com/TradeStation. All right. Tradingwins.com/TradeStation. It may take you to this page. It may take you to the actual store, TradeStation store. I'm not quite sure if it's up yet. Maybe Don, you can help us with that. But to save your spot for this is the pre-release and lock in the pricing. This will be $99 a month to try this out. $99 a month. Just go to tradingwins.com/TradeStation. I believe the link. Oh, there we go. The link is Don just posted the link in the chat here. Okay. So let's see if we can bring that up for you and show that for you here. So you can get it right from there. And then we are here to help you with this. Okay. So this is the launch price, $99 a month for Voracity. There's no, you're not locked in for any number of months. You can cancel at any time. Well, with this, we're here to help. So if you ever have any questions, you can email me at info@tradingwins.com, and I will help you out. Or you can join us. I'm sure we can throw in a trial membership with this, a 30-day membership to our pro service, and that way, what you'll receive with that are nightly videos, 5 times a week from Sunday to Thursday, where I recap the markets for you and where I share trade ideas with you, not just from here, but from other systems we have. And we also, as part of that monthly pro service, we have live market chats twice a week, every Monday evening and Thursday morning. So the next one is going to happen this Thursday morning at 10 a.m. Eastern. You can join us there and ask me any trading related question you like. I'm there to help you improve your trading. Let me see if I can try to get this on the screen. Don, if you can, please do. I'm having a little difficulty on my side getting this on the screen for everyone to see. I know the link is in the chat. You can just click from there and see it on your own screens. I'd like to share that with all of you. For some reason, I'm having difficulty doing that from my end. But let me see if I can put this up there. All right. So Don will do that. He says he'll help me out. Thank you very much. He'll share his screen so you can see that there. Let me go back and see if there's any questions I can answer for you. This does work on all time frames. Again, it works with futures, forex, stocks, obviously, ETFs, across the board. This is based solely on technical analysis. All right. So anything you can create a chart on, it will work on. Plain and simple. Okay. But I almost exclusively trade it with options. That way, with options, you can really leverage this because for a couple of dollars, you can buy a call or you can buy several compared to buying $130 stock. So you put in a lot less money, but you're still giving yourself the opportunity to profit nicely from it. Let's have a look. Hassan is asking for the daily chart of NVIDIA. I don't want to. If we have time, I'll go back and do that. I wish I had seen that earlier. I just don't want to share my screen again when Don is showing you the other chart. By
You know what, Vince?
join us
I won't be able to share while you're in here. We'll try to bring it up at the end. But the link to the App Store does work for anybody that wants to open it in a different browser. But go ahead and go back to your chart. That would be. I'm pretty sure that's that would be more important than me right now.
Okay, so let me go back here and let's go back and try to look at a couple of symbols. So NVIDIA, here's NVIDIA on the monthly. All right. Now, if we go to a lower time frame, let's see the daily here. So remember, what do you do on this when you first see, when you first look at taking a trade, or maybe you've got that setup bar only, right? So first of all, let me tell you that what you really want to stick to are the setup bars that happen near the 20 period moving average, okay? But here there was a setup, broke above the highs, it's continuing on higher, okay? But over the last little while, NVIDIA's been going pretty much sideways. It's been in this range. And so you can see that there have been a couple of trades, but not great ones, right? Let's go a little further back and see if there's and see when it was trending nicely. Back here, you got some pretty nice trades up in here. Let me scroll back a little so you can see it. Okay? Right back in there. Okay? So that's why I included that slide on volatility. All right. So if you look at the price bars here when they're trending, they're very similar to each other, and it'll be more apparent on a candlestick chart. That way you can see if the bars have a lot of wicks or tails or not. Okay. But when you go recently here, look at the difference in size of these candles. So it'd be a lot more evident on candlesticks. But you want to avoid those areas of volatility on a daily chart. But what you do want to do during these times here is switch to a lower time frame. If you're okay day trading, you want to look at a 5-minute, a 15-minute. There's some pretty nice trades that happen within this volatility. So you can use Voracity many ways. What I encourage you to do again is to try it out with paper money, get comfortable with it, get comfortable, first of all, building that watch list of stocks that are trending nice, or forex or futures, whatever you prefer to trade, a group of symbols that are trending nicely in one direction or the other. Throw on the indicator and look back and look at how it's performed, and then go from there. And again, we're here to help. Let's look at. I saw someone else was wanting. Let's see more questions here. Charles is asking if this will be archived and they can watch it again. I'm assuming yes, but I'll let Don respond to that. Actually, I think John already has. Yes, it should. Thank you. Let me just quickly scrolling to see if there's any other questions I can answer before we move on. Now, a couple of you are asking for the results of the tests over the years. We have tested this. I've tested this myself, again, many, many times over 20 years. I don't have the results to share with you just because they wouldn't be, comparing apples to apples. Over those years, I've made several tweaks and changes to the system. So one set of results is going to be with one set of indicators, another with another, etc. Okay, so I don't have those to share with you, but you have, once these symbols appear on the chart, they don't go away, and they do not go away. So you can pull up any symbol and quickly look back and see exactly how it's done, how it's performed. Okay, so again, I hope we've shared enough with you for you to get a good idea about it. But if you'd like to test it out yourself, go to tradingwins.com/TradeStation, or just click on the link that you see here that Don has posted in the chat box, and that'll take you to the order page. I really hope you've enjoyed it. I hope you got some value out of this, and I hope to see you at our future events and our live chats as well. Thank you so much. I also want to thank Don and everyone else at TradeStation, Craig and the others that have been helping us out for adding our indicator to your store and allowing me to present today. I really do appreciate it. With that, I will hand it back to you, Don.